All right, what's up, guys? It is May 9th, Monday, May 9th. We're going to go over our trading breakdown of the day. We'll come back to this in just a second. We're going to open up TraderView first. Had a green day today, actually, which is pretty fun to see. Been taking some red here lately. Been working on refining some things, though, that are helping me to start pulling out the money from the market instead of just giving it all back. So, um, you'll see we have a number of different things here. I'm not really going to go over too many of them. I tried trading oil today. That would have been a futures trade on the micro futures contracts had I enough capital in my account to trade micro oil futures. So I ended up grabbing USO in my stock trading account and got tagged out on it. Actually, that trade was pretty mean. Um, you could see it just did not do at all what I thought it was going to do. We had like this break and retest, but at the same time, it was hitting a trend line, and I'm like, nah, maybe it's going to do it. And for a little while, we were up, and then the market opened, and it was just done. So, yeah, took the loss on oil today, and took a loss over the weekend on this swing right here, which is um, oh, what in the world is that called? The micro S&P contracts. And then there should also be an M2K contract in there that is not showing up for some reason. Wonder why that is. Oh well, should have had M2K tucked in there somewhere, unless it was counting that as a previous trade because it tagged out last night. That's a very real possibility. I don't know what time frame this thing pulls it in on. So, but I did try to trade M2K, which is the Russell long over the weekend, thinking that maybe it was going to bounce out of that zone, and we just came right on down through it. Did not trade the retest on that. I've been focused 95% on the S&P 500 contracts. So what I ended up doing, I went through, if you go back, my last video was a 45-minute video that I put out of me backtesting a strategy on the S&P 500, trading Dawn zones, and doing absolutely no trade management whatsoever. Just put the trade on, set a 2-to-1 risk to reward ratio, and let the trade do what the trade's going to do, and ended up making like 21% in the month of April. I don't know how normal those results are. I went back actually and let's see if I can't pull this up real quick. Oh, I have it right here. Yeah, I went back and did that back test again actually with a 3-to-1 risk to reward ratio. Once again, and this is from April through basically present. I haven't uploaded any more recent trades to it, but just assume that you had a $20,000 account when you started, and in April and the first week of May, you made $11,000. Just by putting a trade on, setting a 3-to-1 risk to reward ratio, and doing nothing. No trailing your stop loss, no making adjustments. And so the reason that I decided to do a back test like that was because I was like, all right, my issue last week was I'm cutting out of positions way too soon. I'm not actually letting them run, and so what's happening is I'll risk $200 and take a loss on a $200 trade, no problem. Doesn't bother me. If I'm up $100 though, it's like, I gotta lock that in. Don't want to let that go. And so one of the things that I'm working on is just uh, not scaling up in the sense that I'm putting more capital into the market, but scaling up my mindset and understanding, okay, if I'm risking $200 on a trade, I should be expecting to make at least 400 in return. And start flipping that mindset instead of being like, I'm going to lock in a $50, $50, $50, $50. Oh no, I took a $200 loss. Now I'm back to break even. Let me go back to grinding my way up. And just saying, these zones, these are all Don's zones. I'm copying them right from him. They work pretty darn well. It's almost like the guy knows what he's doing. Um, and so maybe I just trust the zones. I trust that the reason we're drawing these things here is because that's where the market makers are moving the markets, or that's where large institutional trading is taking place. If you were to slap a volume profile on this chart, you're going to find it lining up with zones. That's where the trades are happening, and so maybe I should just trust the zones instead of instead of trying to babysit the trade myself. And so I did my best to put that to practice today. I did fail a little bit. So let's talk about that. I went ahead and I copied my zones into TradeStation so we can have a visual because I like these little dotted lines. They're really convenient for going through and just sort of looking back on my trade history and figuring out what I did well, what I need to work on, blah 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 blah. So just following the rules of the backtest. Just really simple rules here with one tweak. I'm taking type 1s and type 2s. If you don't know what a type 1 or a type 2 is, I'll explain it here real quick, but you really should go check out Don's videos because that's what he teaches. So you have these zones. This is where institutional activity is taking place. A type 1 is where let's see if we can. Nothing is a great example right now, but let's just use this bounce as our example. A type 1 is you're above a zone, you come down into the zone, and right when you hit into the zone, you put on a trade. And that trade is like you just want your foot in the door. So if it bounces straight up from there, at least you've got a little bit of skin in the game. A type 2 is when you come down and you hit the back of that zone. That's where you're really looking for. If it's testing from the top, you're looking for the bulls to step in and take this thing up. If this was reversed and we were doing this is a break and a retest, but same concept here. You could take the type 1, type 2, take a loss, reset your strategy and say, all right, the bulls aren't there anymore. So we push up, we retest the zone from the bottom. There's our type 1. We push up a little bit more. There's our type 2. And type 2s are really where the money gets made trading this stuff because, like this trade, I would have my stop right above this wick here, which is conveniently above this wick that popped up here. It's above most of the wicks that, yeah, actually that'd be a nice and safe type 2. You could maybe even tighten it a little bit, cheat a little bit to try to get a 3-to-1 risk to reward ratio on that. Or sorry, three contracts. What am I saying? And then if you do a 3-to-1 risk to reward, you've got that right there. So the difference there is a type 1. We'd put this trade on, put our stop at exactly the same spot. I still want it above that wick. That would bug me if it weren't. So I'd do something like that. I might still take 3 contracts on that, but you put this trade on. Well, if you run zone to zone, you might squeeze a 2-to-1 risk reward ratio out of it, but you put the type 1 short on there with a stop up here, you're going to lose $200 on that trade if you're wrong. So you're just going to tag out and you're going to lose 200. And you stand to make 400 if it comes all the way down here and tags this zone, and I'd immediately flip and try to go long. The type 2, you get in a nice tight order 3 contracts. Like I said, I'd cheat. That would be a little bit more than oops. Let's just do paper trading real quick. Create limit order with 3 contracts, you'd be risking $206. And I would definitely do that. And then your 3-to-1 would be right about here, which means you'd be in that trade all but 2 hours and make a little over $600. That's where the money really gets made. And if you manage to run these things zone to zone, that's where you start seeing real money come in. But that's a subject for another day as I continue working through what is stopping me from being a really successful trader. Trying to micromanage my trades, I think, is part of it. So for now, I need to work on just trusting zones. So what happened over this weekend? Sunday, we opened up. We gapped down. I took type 1. We were right around there. Took a type 1, stop below the zone. Took a type 2, stop below the zone. And as you can see, we came down. I had my type 1 stop right here because that was $200 risk. Type 2 stopped out. So I lost $400 because on each trade I'm risking $200. Lost $400. We pushed back up, touched the zone, and as soon as we broke that and we closed below it on the hourly time frame, I said, okay, great. We pushed back up, we retested the zone, and that was my type 1 short entry. I had a limit order set for the type 2, obviously never got filled today because we just bled off for the remainder of the day. And you can see we bled off and I was doing pretty well. Then we pushed back up and I watched a lot of my profit disappear, and then we bled back off. And then right here, it was right before 3 o'clock. We call that power hour or sour hour, depending on what direction the market's going to go and what you're hoping for. Um, in this instance, it started pushing up. It broke above these previous highs, broke above this wick, and tagged me out. And right around the time that it tagged me out, no, yeah, right around the time that it tagged me out was right up here. It turned around and started moving down. So I did end up doing that thing that I said I wasn't going to do, where I got out of a trade and then got back into a trade. I broke my own rules, and the end result was this gap right here cost me $100 in profit, because then it just kept bleeding off, bleeding off, bleeding off, and I hit my take profit down here. So that gap, or sorry, that gap right there, breaking my rules when I said I wasn't going to micromanage a trade. I'm not going to try this in and out thing, because every time I try it, I do worse than if I just held. So for me, somebody like Don, he can get in and out all day and he's going to do fantastic. I'm not there yet. And I'm recognizing that about my own trading. And so it's like, okay, I'm just going to go ahead and let this thing play out like it needs to play out. And so what ended up happening today, like I said, gave away about $100 profit that I really shouldn't have, had I just let the trade actually do what the trade needs to do. So zone was down here. A lot of people bought the dip right at market open, and then we started pulling back. Interestingly enough, the zone on the futures is a little bit off from the zone on the CFDs, which is SPX 500 USD. That's what Don draws all his zones are. So this is Don's zone. We hit a type 1 here, and as you can see on the futures, and even if we were to go to the continuous contract future, we never actually hit that type 1 until now. So we finally hit the type 1. I kind of think we're going to bleed off for the rest of the night. We are also at the expected move for the week. That has me leaning bullish. The last time, by the way, that we hit an expected move and a zone and said, no, I think it breaks straight through, was this amazing short play where I kept trying to buy the dip, buy the dip, buy the dip, buy the dip, and just took losses the whole way down instead of shorting at the top, having a wonderful day. Would have taken losses here trying to go long and then went short and did just fine. So I am long right now. You can see that I do have a long position on right now, and I'm sticking to my guns on this. This is either just going to be where it reverses and pushes up and I end up making a 2-to-1 risk to reward trade, or it's going to come down, hit my type 2, and I will be aiming for a 3-to-1 on that one with my stops down here, and my take profit on the type 2 will be right here. So we just need a tag and a good shot up, which I think is a pretty good possibility for tomorrow if this thing comes down. I actually wouldn't mind seeing like a shot of red in the morning, people panicking, it gets bought up by some institution, and then we push from there. But we'll see what happens. Right now, we're hitting a zone from the top side that tells me to go long. If we break through it, I'll look for a break. I'll look for the candle to close below it to confirm that it was not a fluke. It was actually the zone is broken. I'll look for a retest, and I'll go short just like I did today. I will flip directions as soon as the market tells me to flip directions. We will see what happens. Um, I feel like there was one other thing I wanted to say, but I can't for the life of me remember what it was. Oh, my other trade that I said I wasn't going to do this, and then I broke my rule. And this is the kind of thing that reinforces bad behavior. But this trade, man, what a fun trade. I grabbed SPY puts on Thursday, which was right here, May 6th. Was that Thursday? No, May 5th was Thursday. So we were here, and I think that was right when we broke below and we were kind of doing the derpy retest thing. If we look at it on more of a chart here. Um, when did I take that trade? Let's look real quick. I got in at 10:33. Or no, sorry, I got in at the very end of the day. Yeah, I remember that now. 5 minutes before market close, got in a put because we broke below that zone and we were kind of, I guess, coming up to retest it at that point. Yeah, it was right around here that I got in SPY puts. Completely forgot that I had them through all of this, and then it just bled off. And man, look how great that worked, just letting that play out. So yeah, locked in over $500 on that one trade. So I am green today. Definitely, I'm proud of myself for sticking to my guns for the most part. Like I said, gave back about $100 profit, but Those are the things where I've gone through. I've identified the weaknesses in my trading. I'm actively working to fix those, and so my biggest focus right now is just actively improving on the things that I'm bad at, and over the course of time, seeing that accumulate not only in my P&L but then in my expected daily gains. So we'll see how it goes moving forward. Uh, if you like what you're seeing, then I guess you can subscribe and follow along and watch me as I learn stuff. All right, thanks for watching. Bye.